Hello and welcome to today's Bitcoin video, where we will be looking at the current price structure, where we might be headed after we have hit the 100k mark, and also where we might retrace to, as well as the liquidation heat map, and again some very interesting data to finish off the video. So make sure you're going to watch this until the end. But let's start off with what is going to happen basically right now or after we hit $100,000. And again, I think I have to remind some people who are watching this is not a way of looking into the future. It's simply technical analysis, and we simply outline scenarios that can happen. Of course, they don't have to happen, but they give us a structure and something we can work with, and something that you could theoretically trade with, because you cannot trade with you don't have certainties ever with trading, so you have to create a system which gives you a way of making your trades. Of course, you're responsible for your own trades. This is just our opinion. Now, as I've highlighted in the past two videos, currently still two scenarios, and there are more upside targets here as well. Theoretically, this trend, this move upwards, could go up to something like 115k without seeing a major retracement. Of course, that is rather unlikely, because that would be a ginormous extension. So what we think is that soon it could be at 100k, it could be at 105k, it could be at 170k, but we've outlined this in the past videos as well. We will probably see a correction. And why are we saying this? Well, most people get stuck in euphoria and don't realize that there's always a chance for a correction, and even a big one. The support zone is a very realistic one if we would go into a correction right now. Of course, this would change if we see higher price movement, but if we go into this area, we would be looking at a 15 to 20% correction, and that is the more bullish scenario. So in theory, it could go even lower, also percentage-wise. And people often don't realize a 20% correction at any point in time in the bull market is not something unusual. In terms of price prediction, it is very hard to tell what is going to happen at 100,000. For that, let's look at our liquidation heat map. And as you can see, there is a lot of liquidity here. So by the time you're watching this video, we will probably have broken the 100k and are now ranging in this area. And there is a lot of liquidity down here, but what we of course have to notice, just because there is liquidity doesn't mean we have to go there, especially in a bull market where we have such strong trends and such strong upwards moves. There is no necessity for a correction. But again, we've outlined this in the past videos, where is a lot of liquidity here at between 95 and 85,000. If we look at the support zone, that is basically somewhere, it's basically here in the support zone. So we might fall into that if we see a correction or a rejection from the 100k point. One more fact we have to outline, which is very interesting, is the funding rate. I've outlined this in the past video, in the last video. Funding basically shows us how many people are long compared to how many people are short. The funding rate for Bitcoin is currently 16%, which is actually very good. This basically means that, and we can look at the history of this, there, on the 18th, which was 4 days ago, we were at 46% and so on, but we can't go back that much in time, unfortunately. But when we were in the heights, in the peak euphoria in the beginning of the year, when we sort of had this, 1 second, I will show you, when we were at this peak, funding was absolutely through the roof. It was so incredibly high that even this high funding we can see here with these yellow blocks is nothing compared to what we had then. And this low funding basically means the current market is much more healthy than we were back then, and there is a lot of room to run. So there is actually a lot of room to run higher in this bull market. What does that mean? There is no way to know that, because in theory, the funding could be sky high in a week. So it's not really related to the price in any sense. It's just related to if people go long compared to if people go short. But we need a lot of people to go short to go higher so we can just catch those liquidations. And if too many people are long, not everybody can win in the market. We need to be seeing some corrections and some liquidations. But I think with that enough said, if you want more information on how to use liquidation even for your advantage, or how to read the funding, or how to do something like this structure yourself, or how to do a trading strategy, anything like that, a more in-depth trading analysis, trading signals, all of that on our website. But with that enough said, I will see you in the next video. Bye bye.